So yesterday what we did was we learned what a gap is and we learned how to identify a gap and where these are found. Just a quick recap. We said, let's say the market is in an uptrend. Usually we see gaps at these areas, right? This is where we usually see our fair value gaps at these areas, right? Sorry, at these areas, this is where we are seeing mostly of our fair value gaps, right? But since we are in an uptrend, the fair value gaps that we really want to target are fair value gaps that are at the lows here, right? And why is it so? Because of the trend, right? What you might find is you can find that we have fair value gaps which exist at the highs of the trends, right? But at the end of the day, what they're going to do is um you can just see price come to them and then just react a bit and then it goes past through them, right? Price comes, reacts a bit and then just goes through them, right? But these ones that you see at the bottom or at our lows that are aligning with the trend, when price comes into them, usually price doesn't come back to those areas and it doesn't break those areas. Why? Because we are also following market structure, right? So what you might see is, this is where we ended yesterday, and let me redraw an idea of where we left. Let me draw an idea of where we left. Sorry about that. Okay. So we can have our market structure flowing like this. And at some point, what you're going to see is we are going to have a fair value gap here, right? And the market can decide to respect this fair value gap. But there are instances where it's respected and price feels like it hasn't done enough. It comes again, respects this one at the bottom, right? Where is that two? Yeah, it comes again, respects the one at the bottom, and then finally moves up, right? But in most instances, the one that it really respects, let's say maybe we had two gaps, it can as well choose to respect this one at the bottom if it wasn't respected, right? Because still considering ourselves to be in an uptrend. So in other instances, all of them will be respected and then it goes up. To you now, it will look like it broke structure, but if you really look at it, it didn't, right? Why? Because we have some traders who trade using trend line. And what did we learn about trend line liquidity? Price comes, gives a false breakout, respects the most recent true low, and then it goes up. I hope you understand there because we did a session on liquidity, if you still remember. right? So let me cancel this out as well. Now, just like gaps, the same application that we did on order blocks, I mean, we can have fair value gaps and we can have as many of them in a trend. So let's do this. I'll show you this. So let's say we were in an uptrend again, right? And you see that we have a gap here. Where's my two? And we see that we have a gap here, a gap here, and another gap here. Sorry, another gap here, and another gap here. And now you don't know which gap the market is gonna use. What you do is you just take out your fib, you put it from your low to your high, and any gap that is below the 61.8, the 0.618%, we want to target that gap. At any gap that's above, yes, price might give us a small reaction. Let's say maybe we are now selling, it can give us a small reaction, sell into that, small reaction, sell into that. But the real reactions, we start getting them at gaps that are under the 0.61% level. Yeah, I hope we're getting it. Now, we have one of the most powerful combinations that we can ever have when we're having confluences in trading. And that's a, let me type it down so that we really get the full idea of it. If we see our trade, or if you see our market giving us a break of structure, or a break of structure, plus a gap, plus an order block, sorry, an order block. And then this setup is going to be very powerful. Like very, 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 very powerful. So what do I mean by that? We can have a market where we can actually see that. Let me do this here. Where we can actually see that we had an order block at this area. And just after that order block, we can see a gap, maybe somewhere around this area. And someone, so let's type in here that we have a gap or an FVG in here, and this box here is gonna be an order block. So someone might ask, is my price just going to come and target my fair value gap, or it's gonna just target my order block? Right. The reality of things is it works in two ways. Right. We can have a setup which can fill the fair value gap and just come and tip on the order block, or just end just a bit in the order block and then it buys. So for this instance, I'm gonna give an example where we will see that we have buys and our trade goes up. Or we can also have a scenario where, say, maybe we're in a downtrend, right? And we have this area over here where we can have our order block and we can have, so let me type OB here, OB order block. Sorry about that. Order block. And just at the bottom, what we can see is we can just be having our gap like this. So we can also write our fair value gap. So this can be our FVG. And what we often discover is price will come back to that area, fill the gap, and sometimes just tip in the order block as well and then go down. But now I want you to know this always. Whenever we approach these areas, what's important is market structure. And if we want to put it in a realistic way, when we approach these areas, our price is almost moving like this, giving us its own market structure. And when it gets closer to those, or when it gets in those areas, we need to see a break of a change of character, a break of market structure, and a continuation in the direction that we're going. Before anything else, our market structure is very important. All right. So go on the live chat and I'll show you a couple of examples from previous trades. Right. So this is our U25. We did this yesterday. Let's look for a different pair, something that's completely different so that we really sure that this happens in each and every market that exists currently. All right. So now this is our Crash 500. What we want to see is we'll actually discover we have a fair value gap over here. This is our fair value gap that we have, right? And you can as well see that price when it got into that fair value gap, it also came and tipped in this order block just above here. I think we can all see that. So now we are training our eyes to see, right? And sorry, and this is our OB. There's someone yesterday who requested that we also show the exact entry points that we would have taken. So I'll show you here. And this is our FVG that I'm gonna be marking here. FVG or fair value gap. So if I wanted to enter this trade, what would I do? So, okay, so our order block it was here and price just came and tipped on that order block and then it fell. Right. So what we can actually now see here is if we go to our 2 hour, I'll show you as well where I would have taken my entry. If we go to our 2 hour time frame, what you see is we had this market structure, a low, a high, a low, a high, and a low. We had our first change of character here. We failed to come and take out this high. And the moment we had our first change of character, this is where I would have taken my first entry just after this full break. Let me show you the full break that I mean. Sorry. Let me show you the full break that I mean. The full break that I mean is here. When we had this full candlestick break, I would have gotten in a sale at around this area, right? Regardless, that price came and played around a bit. Where would be my stop loss? It would just be above my order block. And then it sold. If I missed that opportunity, what would I do now? What I would do is I'll then start looking for the new high and the new low, just like I told you. We'll get a new high and a new low. I put my fib. The next position that I'll take this entry was somewhere around here. Right. Now this is our new high. This is our new low. Right. So how would I have taken it with market structure? And if we want to check and go to a smaller time frame like M15, I want you to see something when we approached that area. Okay, my M15 is not fully loading. So let me go to M30. Maybe it's gonna load. All right. So I'll zoom in. Now remember, this was our new high. This was the high, and this was the low. And if you check where the market structure in smaller time frames, low, high, low, high, low, high, low, high, change of character, and a drop. So I would have entered here at my change of character. So my entry would have been around this area over here. And then we go down. Okay. If there's anyone with a question, you can raise your hand as we proceed. And forgive my voice in the morning, it's not so nice. It's not so nice. It's not so nice. So let's look for other areas where we can see the existence of fair value gaps and order blocks. There's a certain area here that we can all see. As we were downtrending, we had this high, low, high, low, high, low, a change of character, and then our POS, we had it here, right? So what I want you to see is we left this gap that we have over here, and automatically we know that since we've switched to an uptrend in this time frame, this gap here has to be filled, right? But what does that gap come with? We can also see that there's an order block here. And this order block here was the reason why we had this change of character on the daily chart, right? So if we go deeper now, we can mark that OB. So this is to say, if you remember what I said, one of the most powerful setups is having an order block and a gap that broke structure, just like that. You now see what I meant. Here, even as well, structure was broken. Here, even as well, structure was broken. Why? Because it all came from this order block and all came from this gap. I hope you now understand, and I hope now it makes sense, right? So What did price do when it came back to that OB? So let's mark that order block here. Here it is as it merges in the fair value gap. We now go to our smaller time frames. This time let's choose the M15. I hope it loads. Yo, these areas are not loading. I don't know why. Okay, so now let me go back maybe to the M30. Maybe M30 is gonna give us something. Maybe our chart is gonna load in M30. Oh, it didn't again. Let's go to H1. I don't know why it's struggling to load smaller time frames. But what we do see in H1, even if we also want to envision what was happening in smaller time frames, what we can see is as we approached those areas with our highs and lows, high, low, high, change of character here with our break of structure here, and it went straight up. It never looked back.
Mm.
Are we understanding here, guys?
Mm.
Are we understanding?
Yes, yes, yes.
Yes.
Yo, you guys, your voices in the morning, the sound is voice is mine. So, is there anyone with a question?
Mm.
Is there anyone who has a question? Or
Uh, what about the end?
what about the entry?
Yes.
Okay, the ent I think the entry is just what we were talking about. I'll repeat it. Okay,
And then
I'll repeat it again,
yeah,
but pardon, you said?
yeah, and anonokopinda sorry,
Okay.
and anonokopinda sorry. Okay,
Ah,
thank you.
no, no problem to be sorry. Aren't you were dreaming? Uh, so we said as we approach our point of interest, let's say we've actually managed to see where our fair value gap is, and we've actually managed to say that's where prices are tracing into. We want to see market structure approaching that area, right? So
Yes.
usually what I would recommend people is to enter the trade safely, and that is after a breakout structure is done. But sometimes we are different traders. We can choose to enter as soon as we see a change of character. So in this case, you can see on our H1. Actually, let me try to open the M15 again, because this is where entries start. Once a smaller time frame starts switching structure and aligning with bigger time frames, then it's easy for you to catch it in. Okay, so general, I think my M15 is not loading. So let me just use my M30. I think it even refused to load last time. So let's just stick to H1. So whenever we approach a point of interest, be it an order block, be it a fair value gap, or be it that we are approaching our most reactive zones on our fib, what we want to see is market structure giving us highs and lows, highs and lows. We want to see that change of character. As soon as we get a change of character, and we know that we have fully broken that first mini high in between the high and the low, then we start taking entries. So in this case, when I see my change of character and that it is fully okay, I start taking entries, and my entries would be here, right? And now when I see my breakout structure, if I want to add more entries, I will, but if I want to stick with one entry, I'll just keep it. So in this instance, what you'd see is where that change of character and then price just kept on going up. If you're not understanding, I can do it again
I,
and
I understood.
all right.
I understood.
All right.
I think it's
And I hope for everyone, we all know that when we have an order block, right? When we see that we have an order block, like for this instance, I hope everyone knows this. Okay, let me remove this one and let me choose a different color. I hope everyone knows that when we get an order block and when we mark it like so, like now this is our OB, right? I hope we all know that our stop loss for that order block is always above here. It's always, it's, some people they choose to put it just at the tip, right? But I choose just to put it just a bit above, just a bit above the tip of the OB. That's where our stop losses are, and that's where we put them. And I also hope everyone knows that besides an order block, our stop losses, let's say we're buying, they're always just at the bottom here, always just at the bottom here, just at the bottom here. Why? Because when we violate those laws, we would consider ourselves to be going in a downtrend, right? And then when we violate those highs, let's say we're in an uptrend, we're in a downtrend, when we violate the highs, then it means we might switch to an uptrend. Right, I've seen a hand from two people. I'll start with engineer Fibonacci, and then I'll go to Taekwondo. It's fine. Mr.
Hi,
Fibonacci,
good morning.
morning, how are you?
Uh, is it that okay, my question is on the order blocks.
Okay.
Are we supposed to take them on the daily or on the 4 hour?
All right. Order blocks are pretty much a big topic, and we do what we call order block refinement. I was hoping we could do it in the evening, but I can just give you a run through on them so that we don't get confused, right? So when we're refining an order block, let's say for instance, we've seen an order block in, let's say here, um, good. Let's use this point over here. So let's say we've seen an order block in our 2 hour time frame. First things first, what we want to do is we want to mark which order blocks are valid, right? And in this case, from that high, let me do this. Let's say we're using this high and this low over here. What we would see is we have two order blocks, right? We have this one here, and with this one here. So now, instead of entering early or entering late, what we need to do is we need to do what we call refinement. So now we switch to M30. I want you to notice something at the areas that we marked. Right. You notice that instead of that order block being up, it's now down. So we shift our price. It means it's saving us time from entering early here. And if you look at this one again, instead of it being a bit up and down as well, we reduce it and it has dropped in size. So let's go to M15. I hope our M15 is gonna show because it was refusing. Right. And in our M15, all is intact. Now, instead of our order block being up, it has actually reduced size again in M15. And for this one, it still stays intact. Do you see what I've done there?
Yeah, I saw it.
Yeah. So it means if I was more concerned with sniper entries for this order block, I would have entered it somewhere around here. It would have dragged me a bit. That's more movement for some of us, even me. It's big because I'll be putting big, huge load sizes, right? So even if we look at this order block, it was somewhere around here, I think. So instead of entering it here, it, it reduced to this size, meaning that instead of entering early and having this drag down, I'll just wait for price to come and just tip on it and then you do go right straight away.
Ngoda kubvunza
Okay.
ku kuma-order blocks unogona munogona kunomadefina futi kusvika ku5 minutes kana ku3 minutes kana ku4 minutes
Yeah,
time frame kana 3 minutes.
yeah, you can, but now it depends on the type of trading you'll be doing. Are you scalping? Of course, yes, you can check them from a swing point of perspective, but you can refine them. But as for me, I don't usually like refining them to any time frame that is under 5 minutes. I just like doing it up to 5 minutes for me is fine.
Okay.
Although if we're trading spikes, if we are trading spikes, we can refine them to as low as 1 minute.
Okay.
Yeah, if we are trading spikes only, that's when we can sometimes consider marking an order block to as low as M1.
Alright.
So it's just like gaps. We can also refine gaps. Um, and how do you do that? Let's see if we have an area with a gap. Hoping this area did what I think it did. So let's say we have a gap here. And this is on my 4 hour. If we move that gap to say M15, if we go to
But
M15,
tripa game ipapo ndinoda kubvunza kuti hanti yasiyakawika kuhigher time frame inenge yarespect equivalent game
did you attend yesterday's lesson?
yesterday.
Yeah. The one we did in the evening.
No, I wasn't
Right.
available.
Okay. We said for us to consider that a gap is respected, it has to be respected at least 50% of it, meaning that if price comes into that gap and it doesn't go as much as 50%, we don't consider that gap filled or respected. At the end of the day, price
Okay.
will come back, respect it, and then go wherever it wants to
To
go, be it down or up.
okay.
Okay. You can also
I
check
think
the video on YouTube. We posted the video on YouTube explaining about this concept, so you can check it as well. And
okay.
you can. All right. So
I'll
I
check
was
it.
talking. Okay, so we're talking about this gap over here, guys. Let's just make sure it's the right gap we're talking about, because I don't want to end up showing you things that we didn't agree. So we have this gap over here, right? And we want to refine it. I want to show you something about this entry that we have here. Okay, I'm gonna do it in less than 1 minute because our session is left with less than a minute about this entry that we had here, right? Right. So if we move on to M30, what we are going to see is what you're going to see is that gap now shifted. It's now here, right? It's now here and here. And if you look at M15, let's go to M15, right? Come on, our time is gonna end. That gap is again shifted and it's now here and here. But then what we see is it left another gap where it left another gap here in this area. Just here. And what did price do? Price do came and filled that gap to the tip here and then it fell. That's how you refine a gap. And then